Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Heather Self and Neil Insull.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Heather Self. Those of you who were listening to the podcast last week will recall that this week it was going to be Roger and Neil, but unfortunately Roger's been seconded at the last minute to Santa's workshop to ensure all the accounts are done in time for Christmas. And as a non-dom, Santa has much to prepare for. However, I'm delighted that Neil Insull has been able to join me as scheduled. Neil, this is episode 64 of The Tax Factor, and last week there was talk about the Beatles tax legislation. We definitely need to do a bit of Christmas singing. Do you want to start?
Yes, Heather. let me start.
Bit of singing. Da 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 da. No. Let's get serious.
We should get serious.
We've got a few tax cases to talk about this week, mostly relating to avoidance, some of them with some good hints and tips that are relevant to a wider audience. So Gary Lineker, I think, Neil, is it all over yet?
Heather, that's a fantastic introduction to the latest instalment on the Gary Lineker saga. I mean, this is Tax Factor 64, and you were talking about 64. Gary's also 64, so there's a nice linkage here to get Gary. Gary, as many of you know, Gary Lineker is a famous football pundit, broadcaster, ex-footballer, but also a man who has decided in the past to organise his tax affairs by paying himself through a partnership vehicle. Now, HMRC did not particularly like that in the sense that they decided that it was a case in which the IR35 legislation should be invoked and took him to court. They lost last year, and that was announced last year, but this week we heard that Gary has settled his tax liabilities in relation to the partnership with the revenue, and draws a line under his tax affairs, we believe. So we do think it's all over. But it's an interesting case because he won the case. So you think, what happened? Why are HMRC settling, or why is he settling anything? Well, clearly there was unfinished business that the revenue felt in relation to his tax affairs. Obviously not going down the IR35 route, but presumably generally trying to assert that he was an employee of the BBC and Sky, who he was working for. BBC and BT, I think it was actually. Anyway, we now hear that he's settled, and presumably some of the money that the revenue were chasing after, I think the headline was like £5 million. I think that clearly was a rather overinflated figure. Gary would have paid a lot of tax as a result of working through his partnership in any case. So I guess they've come up with a smaller amount of money that takes the revenue off his back.
It's interesting, though, because the revenue have been very clear to say they're settled in accordance with their litigation and settlement strategy. And that doesn't allow them to do deals and settle for some random amount, which is less than the full amount. I can't help wondering, if I were Gary Lineker, or if I was advising Gary Lineker, I probably wouldn't want to settle having won at the first tier tribunal. So you do have to wonder whether perhaps the revenue were advised that their case wasn't as good as it might have been. We will never know.
We will never know. There are secrets there to be held onto, I feel.
Talking of secrets, I'm moving on to another sports person.
Oh, I love a secret, Heather. Tell us another one.
Well, last week, Nimesh was talking about a mysterious tax case where we didn't know the name of the taxpayer. We now do. It was Frankie Dettori, the well-known jockey. What had happened was that he'd done what seems to have been an aggressive tax scheme, which, not surprisingly, the revenue wanted to challenge. It was a scheme sold by an individual called Paul Baxendale Walker, who we have mentioned once or twice before on these podcasts. He is a struck-off solicitor who I think is now a porn star and not somebody to be trusted for tax advice. Anyway, Frankie Dettori had done this scheme on the advice of his accountants, but having disputed it with the revenue, he wanted his tax dispute to be held in private, and the tribunal said no. Frankie Dettori said, all right, then I give up, I'll pay the tax. And the revenue, interestingly, said, yes, but we're still going to make your name public. And that's now been done. There is a lesson there. Tax tribunals are a public forum. They're part of the court system. Justice must not only be done, but must be seen to be done. You can't avoid the publicity just by saying you'd be embarrassed about it. Not Frankie Dettori wasn't quite as embarrassed as Lester Piggott, though. Anyone who is 64 or over might remember Lester Piggott, the famous jockey from an earlier period, actually got sent to jail over his tax matters, not because he was doing tax avoidance, but because he settled with the revenue. It was all going terribly well until he paid the tax and interest using a cheque on a bank account that he hadn't disclosed. And that was the point at which they really hit him hard.
A classic story.
One unusual tax case this week, there's a film tax case where the taxpayer actually won, but it's a sort of Schrodinger's tax case. They won because they would have lost if only the revenue had challenged them earlier. They claimed relief for investing in films and managed to get their tax relief. They offset losses from their films against other income. So far, so good. They then did an exit scheme which allowed them to sell their partnership interest to somebody else, and they hoped that that would be tax-free. Now, the revenue said, aha, we have an anti-avoidance section which will apply when you try to sell on your rights to film schemes, so we'll tax it as income. The taxpayer said, but that section only applies if we were trading. And the later tax case of Samarkand shows that we were never trading in the first place. So they were never trading in the first place, so shouldn't have had the loss relief. But the revenue by this time were too late to challenge that. The revenue wanted to challenge them on the exit route. And the taxpayer said, well, no, you can't, because it doesn't apply because we weren't trading. So as I say, very much a Schrodinger's tax case, or we might even call it Escape to Victory, which is one of the films that was financed by film tax financing back in the day. That's only a first-tier tribunal decision. I can't help thinking the revenue might have another go at that one in the upper tribunal, because it's not a decision of fact, it's a question of interpretation of law. Turning to another argument which at first sight seems hopeless, there's a castle that wants to declare independence, I think, Neil.
This is a very interesting story. There's a lady called Kaplan Mulholland. She's a Canadian who's come to live in the UK. Her claim to fame is as a Real Housewife of Toronto, and she was in that series, I guess, about seven or 8 years ago. Not that I was a viewer, but she's earned a lot of money. She's invested wisely, and she's also invested in a rather lovely castle near Hythe in Kent called Lympne Castle. Dr. Ann Kaplan Mulholland, she is age like Gary. In fact, she almost shares the same birthday as Gary Lineker. She's also 64, is married to another 64-year-old who's a cosmetic surgeon, and they live in Lympne Castle, which they bought a few years ago for about $5.5 million. They've spent a lot of money doing it up, and it's used for weddings and things like that. And in fact, if you use the wedding hall, it's the same room that Wings recorded one of their albums. So there's another Beatles link there, Heather. Anyway, she's rather annoyed about the non-dom rules. Okay, we won't get into too much of the technical work on facts around that, but she's very annoyed with that, and she's saying, I need to leave because I cannot afford, because I have so much overseas wealth. Why on earth should I be paying tax in the UK on that? You know, let the old rules stand and let me just pay tax on my UK earnings. Anyway, she's decided to write to the king. Not that she knows the king particularly well, but she feels she has that opportunity. And she's asked him to grant independence to her estate, so Lympne Castle and the estate around it, because of the change in the rules. And she feels that having an estate, she can actually therefore leave the country without actually leaving the country, if you see what I mean. So anyway, she wants her Lympne Castle to be a place in which not only she can have a position outside of the UK, but in the UK, but she's inviting everyone else who wanted to leave the UK, who are non-doms, to join her in her castle. I guess the castle has a lot of rooms, but I doubt it has enough rooms to deal with all the non-doms who want to leave the UK. She's an interesting character. She does say, she was interviewed recently by the Daily Mail, and she said, I'm not motivated by money and never have been. I don't have a desire to be known as a person of means. I want to be known as a person of value. And she says, I don't have any financial goals, as I have everything we need. We have a castle and Buckingham Palace isn't for sale. We have enough. The more you have, the less you want. Well, clearly that's not the case. She wants more. She wants to pay less tax and have more in her pocket. So I wonder, I'll take that with a pinch of salt. But anyway, it's an interesting development. We'll see whether we'll get another passport to Lympne Castle in the same way as the famous film Passport to Pimlico, which became part of the Duke of Burgundy's estate for a while. Not for very long, but for a while.
We will have to wait and see, but I wouldn't hold your breath on that one. Turning to something which perhaps affects rather more people than castles in Kent, just before the budget, a lot of people were considering whether to take lump sums out of their pensions in case the rules changed in the budget. Now, when we talked about this sort of thing on the Tax Factor, we did say only do something if it makes sense for you in your personal circumstances, and do it based on what the law is today. A lot of people rushed and took tax-free lump sums, and some of them are now regretting it because the law didn't change and they'd quite like to put their lump sum back back in again. Initially, a lot of the advisors said, oh, it's fine, you have a 30-day cooling off period, you can just cancel the instruction and the money can go back in. However, the Revenue have now issued a general newsletter about pension schemes in which they say very explicitly, we are aware that some schemes are being asked by members how they can return payments of pension commencement lump sums or uncrystallised funds pension lump sums that they took because of speculation about changes that might occur in the budget. Some pension contracts allow for a cooling off period. These rights apply to the purchase of a new product only. The payment of lump sums is not a new product, which means that cooling off periods do not apply. Therefore, you can't put it back in, and even worse, if the conditions for making a payment of a lump sum are not met, for example, if a member is not entitled to a relevant pension within 6 months of the lump sum being paid, it is an unauthorised payment, and the unauthorised payment charges will apply. So the payment of a tax-free lump sum cannot be undone. A clear warning there that if you do any planning just before a budget, you have to assume you're going to be stuck with the results of whatever that planning might be. If that affects you personally, please go and speak to your usual contact at Blick Rothenberg or your other advisor about what your situation is now. But please don't assume you can put the money back in. You might end up making a problem worse. That was all a bit serious.
So yeah, HMRC are no fun at all, are they?
No.
They just take this so seriously.
But let's finish with something a bit lighter, Neil. What's your advice to people about their Christmas dinner planning?
Well, exactly. We're coming up very close to Christmas. I know you've got a very special tax factor next week with Nimesh, where you round up the year and you offer season's greetings to all our listeners. But let's do that early and offer a Christmas taster, a little taster in many senses, I guess. I want to talk about the ideal Christmas present for your children or your nearest and dearest. We often think about giving puppies for Christmas. I have certainly thought about it, never done it. But VAT casts a shadow over this, because if you buy a pet or a puppy or whatever it is from a pet shop or elsewhere, you'll pay 20% VAT. These are standard rated goods. But here's the thing. If you wanted to give a rabbit as a pet, then there is no VAT. These are zero rated items. And the reason for that is that rabbits, even though they can be kept as pets, are actually obviously a kind of food. So you can eat a rabbit, and for that reason, it is zero rated. So if you wanted to give a pet, think about giving a rabbit. But don't forget the old adage, a rabbit isn't just for Christmas. It could also be for Christmas dinner.
And on that happy note, I think we've run out of time.
Do you think I should change it? It's not for Christmas dinner.
The Tax Factor from Blick Rothenberg.
I think perhaps it's just as well that we've run out of time for this week. My thanks to Neil for joining me, I think. I've just time to mention that we've released a new episode of our documentary series, Success Stories. In this episode, audit, accounting and outsourcing partner Kish Shah talks to John Pickering and Helen Pyman of Miele. John and Helen talk about Miele's 125-year growth story and the challenges the company has faced, particularly over the last few years. As well as this episode, all previous episodes are available on our website or our YouTube channel.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever it is most convenient. We record and release them in less than 24 hours, so you always get the very latest news and updates.
Next week, it's our final episode of the year, and I'll be back again looking over 2024 with Blick Rothenberg CEO Nimesh Shah. With 2 budgets, an election and an incoming US president-elect, it looks like Nimesh's 2023 prediction of this year being the calm before the storm was pretty accurate. If you enjoyed the podcast, please subscribe and give us a rating or review. Thanks for listening, and we hope you enjoyed the episode. Goodbye.
Goodbye.
That's The Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts. And join us again next time on The Tax Factor.